Hello and welcome to Investing Confidential. Well, the trade war's over, right? Yeah, big rally. Trade war's over. I don't think so. But as I said before, the trade war was just a sideshow. The whole trade thing, it's a complete sideshow. And now you're seeing from the the Revolution Day to today, it's recovered everything, right? So I call it Revolution Day. They call it something else. But the bottom line is that if you just sat and you said, "Hey, this is a sideshow. Don't worry about it," you wouldn't. Nothing would have happened because it's a complete nothing burger. At the end of the day, you can tell me I'm wrong. That's fine. But it's what's happening around this whole trade thing. So I'm going to discuss some things about the trade war. I'm going to discuss what's really important, and then I think, one of the best investment opportunities today that you can get yourself involved in. So let's look at it. Okay, the trade war, whatever you want to call it, is from liberation. We had Liberation Day. Now we have the trade war's over because Trump and China got together, or she got together, and said we're going to put a moratorium on this. This is a joke, folks. I mean, it doesn't matter. This doesn't matter. This is all negotiation. There was never going to be a trade war. Nobody wants a trade. Nobody wins. In fact, the U.S. is going to win. The U.S. government's going to win, but nobody's going to win this thing. So there never was going to be a trade war. There's going to be tit for tat in the press, the media. The media got played on this completely, and the media did a job on investor sentiment. And if you lost money from Liberation Day to today, blame the media, blame CNBC. They're morons. Blame any media. They're a joke. They're an absolute joke. Okay, so again, Liberation Day today, big nothing burger. Again, a sideshow for what's really important. And I'm going to tell you what the only thing that's important is what's going on behind the scenes in Washington. It's the budget negotiations. I'm going to go back and tell you, as I told you for months, the whole budget thing is really the most important thing in government today, because we have seen the German government collapse. Why? Budgets. French budgets. Okay. Korea had a just almost a coup d'etat budget. Okay. China is having major problems, financial problems. Comes down to the budget. They're spending more money than they're taking in. And for a lot of countries, okay, Spain, their government overhauled budget, okay, and this thing's coming to a head in the U.S. Okay? This thing's coming to a big time head. This is what you forget the trade war. Don't even pay attention to trade anymore. This is all that matters, because part of this negotiation is taxes. Now, Trump realizes that unfortunately Doge is not going to come up with as many cuts as possible. Hey, look, don't get down on Doge. Came up with between 100. Was going to at the end of the day, it's going to be between 150 and 200 billion worth of cuts. Billion. This is incredible. Who would have thought that this government would be able to cut 100, 200 billion dollars worth of fraud and waste, well, mainly waste. Okay, but it's incredible. But it's not incredible when you look at the real problem here, because I'm going to show this again and again and again. We have a almost 37 trillion deficit. So sure, you can make fun of Doge, 200 billion, nothing. Well, look, I don't know if this Doge 423 billion is really a number, but let's say it's 200 billion. That's a safe number. It's not going to make a dent in a $2 trillion deficit, soon to be 2.5 trillion. We spend more money than we take in. That's the bottom line. And we spend it what? The big numbers here are the Medicaid, Social Security, defense, and interest. Now, the interest that we pay on the debt is just going to keep going higher. Go higher. We pay $1 trillion, as you can see in the lower. It is going to keep going higher. We have to refinance 10 trillion in bonds this year alone. This is a mess. Okay, Medicaid, Social Security. Look, the whole Medicaid, Medicare situation. There's more fraud in there and waste, probably more waste than you could imagine. And they need to take a scalpel to it and cut it. And I'm not saying cut Medicaid and Medicare. No, cut the waste, the massive amounts of waste, bureaucratic waste that's in the Medicaid situation. And Social Security, nothing you could do. There's nothing you could do. Try to find fraud, get rid of it. It's not going to be that much. But look, think about it. If it's 10%, okay, that's a lot of money. It's a lot of money, 150 billion. But it's not going to dent and change anything. So again, put it in perspective, Doge is good, but the U.S., no, again, it doesn't matter. No matter who got elected, nothing matters. This 30 years or 40 years of debt accumulation is coming home to roost. And it's not just here. Okay, look at global. The rising tide from again, going back to this is like, talk about another time when we think the WTO. Look at the this is right at the bottom was WTO. And all of a sudden, China comes in, globalism comes in, and what do the governments do? They just start piling on the debt. 324 trillion. Folks, this is beyond comprehension. There is no way this money could ever be paid back. Every government is broke today. There's no chance. But they print money, so obviously, but there's just no chance. It's staggering. 324 trillion in the first quarter. I mean, this is insane. So there's really nothing anyone can do. And this is why you're seeing gold, Bitcoin. People are finally realizing that fiat currencies are a joke. Okay, so Liberation Day, what happened? As I said, it doesn't matter. But I pointed out in a video maybe a month, 2 months ago that the most puts were ever bought. So it's probably the market's probably gonna rally a month ago. And look at the bearish sentiment we've had recently, the highest ever. I mean, you go back to 87. Again, the rally was violent. Why? Because everyone got bearish and everyone got short. And even, you look at the retail investor, excuse me for this. This is bull and bear again. People were very, very bearish. Okay, very bearish. And something had to go. Something had to move. But the cause of all this, this is staggering, folks. This is money flows into U.S. equities. Now, look, it's been stagnant for years and years and years. And look at the pandemic. Look what happened. 1.2 trillion went into U.S. equities alone during the pandemic period, and basically took valuations to a level that we've never seen before in the history of the stock market. Something impossible. This is like a 3 sigma event that we've seen over the last 10, 15 years. The amount of money, again, over the last 3 years, it's just insane. And then look, we've talked about buybacks before. This is all about buybacks again, folks. Look at the amount of buybacks since 2021 relative to the past. It's all about, and then this year we're having a record buyback. Record. I mean, It's this is a rigged game. The buybacks, the flows since COVID. Because and why does this work, folks? Because the markets are illiquid. When you have illiquid markets, you can manipulate them. We have record inflows, buybacks, everything's going up. Everything's going up until it doesn't. And as an investor, I think I've talked about this before. The government data that comes out, CPI, GDP, GNP, these they're worthless. They're worthless because the way they gather the data. I've seen this 100 times, but I'm the first one basically who was talking about this a while ago, 2 years ago, that the government data is flawed. It's fake. The participation rates are now below 25%. That means they're sending out faxes. They're calling people on landline phones. I mean, this is insane. So no one's participating. But yet, U.S. businesses, according to this survey, they use. What do you think they use? They make decisions based on flawed government data. Okay, and they're still making those decisions based on flawed government data. So all of this points to what's really important, not the tariffs, but we talked about it, the U.S. dollar, the decline in the U.S. dollar. Now we're seeing a rally today with the stock market rallies, everything goes so the dollar, but this is going to fade eventually. But with all this trade talk, it's really about the U.S. dollar because there's serious pressure, along with obviously the debt burden that we have. There's serious pressure to the dollar. Okay, we're going to see a summit coming up where Latin American countries will be discussing alternatives to the dollar, and obviously, Lula, the president of Brazil's in China right now, and I don't think in the very short term they're going to come up with an alternative, but they're looking for one. And most likely the solution is going to be some type of gold-backed currency, probably in some type of blockchain, right? It's going to happen. And people around the world will be able to trade goods and services between each other and use this form of payment, and they're going to stop using the dollar because of blockchain is going to allow this, folks. Blockchain and AI. So the dollar's in trouble, and not just the dollar. All fiat currencies are in trouble. They're all in trouble. And the pressure, going back to the pressure on governments and why people are coming to the table now. And here's Russia. Like Russia all of a sudden said, hey, we'll negotiate a peace. It goes on to the budget. Look at the budget deficit in Russia is massive right now. Their currency's been strong, their ruble's been strong, but they've got a huge budget deficit. And whether you're a strong man like Putin or in a democracy, these budget deficits are killers. Absolute killers, and they know it. And the budget deficit is there because they're spending more on the war than they're taking in. It's got to end. The war in Ukraine is over. And this is the reason. Budget deficit. And China, right? Why did China come to the table? Okay, this article came out, but I've talked about this before. The Chinese economy is shot. Completely shot. Real estate market has not come back. Xi Jinping destroyed the tech sector to a certain extent, and this whole trade thing did a number on a lot of Chinese factories laid off people, and now used to be that any data you got out of China was suspect, right? Suspect. Take it with a grain of salt. Now, folks, there is no data. There's no data. Why would, if China was doing so well, Why wouldn't there be data? Why wouldn't they want to show that they're surviving the trade war? Because they were getting their ass handed to them. Companies were laying off. The pressure was immense. This is why this deal was cut. So at the end of the day, like him or not, taking no stance on politics, Trump played a game of chicken and he won. For now. For now. It's all about the economy. But there's no reason to be complacent, folks, because the bond market's telling you that number one, Powell not going to be able to cut rates. No chance. But this is the bond market is rising. 10-year rising. This really hurts the US because of the refinancing. So again, they've got to offset. So the US wants the dollar weakness can offset some of this. So you're going to see whatever rally, if you're trading currencies, whatever rally you see in the dollar, fade it. Fade it. Okay? And because it's really just about the US dollar and budget. And if you think all of a sudden we're in another bull market, sorry, folks. This is what really drives markets, right? Earnings. And this is in the red. You're seeing guidance in quarterly earnings calls. Managements give guidance. And you're seeing guidance being revised lower. Earnings guidance, lower, lower, lower. We have the highest earnings revised guidance going back over 10 years, over a decade. That this does not support a bull market. I'm sorry to tell you, does not support a bull market. And then you look at this. This is a chart that Jeffrey Gundlach put up last week, and it tells everything you need to see. It's showing that U.S. relative to the rest of the world, U.S. equities versus the rest of the world, this is valuation. During the Nifty 50, this goes back to the 70s, internet bubble where things were very overvalued. We are at conditions that have gone haywire. Our U.S. equities are the most overvalued they've ever been and they ever will be. And you could look at this chart and say, hey, this has been going on for a while. Yeah, true. But we never had the deficits and the debt that we have today. So the trigger of what's popping this bubble is the current environment. That's the trigger. So let's look at where you should be putting your money now. All right. So, you can't put money in US stocks. I'm just sorry to tell you. This tells you, no, run away. But here we look at all asset classes, right? Winners and losers over the last, 15 years or so. And you see a lot of blue at the top. Those are the best. That's mainly US stocks. So US stocks have just been the number one place to be for 15 years. Probably no one place to be in 30 years. But this is just... And when you get a chance, study this, okay? Because at the end of the day, there's some really interesting opportunities. And the number one opportunity, one asset class that I think has the most opportunity for an investor today is EM bonds, emerging market government and corporate bonds. Why? Why? Because it's contrarian. Nobody owns them. People have given up. And the yields are high, close to 10%, some even higher. And these countries are benefiting from the surge what we have in commodities. We're in the beginnings of a commodity bull market, and emerging markets are commodity-based governments or economies, and investors have abandoned emerging market bonds, just abandoned them. As you can see by the ownership. So that tells me this is the best contrarian investment I've seen in quite some time. This reminds me of small cap stocks, which if you had paid attention, you'd have seen the same type of thing. And then like you've seen over the last year to date, 1 year, if you invested in small cap domestic U.S. stocks, you're destroying the S&P. Okay, destroying it. So how do you do it? Here's a list of funds. I'm not going to recommend individual bonds. I can buy them, but certainly for the average investor, I wouldn't recommend it. But here's a bunch of funds with, you can see the yields. Pick one, pick two, pick three. Allocate money to emerging market bonds. You'll get a good yield, good return, much better than the S&P, much better than private equity, much better than VC, all these illiquid scams. So this is really, I think, one of the really interesting opportunities in today's environment. So to recap, the trade war, as I said before, the whole trade thing is a sideshow. It's about the dollar. It's about budget. The U.S. budget is a disaster. Politically speaking, I don't see how it can get through. I don't see how we get through it all. So we're coming to a head one way or the other. And it's not going to be good for U.S. financial assets, for Wall Street, everything else. But there are opportunities. So when you hear trade, this whole trade thing's going to keep going on. Trade war's not over. It's going to keep going on, but it's a sideshow. Don't pay attention to it. Focus on the dollar. Focus on the budget talks, not just here, but all over. And obviously investors, especially U.S. investors, be careful out there.